But let's put the focus then on the market. We're well in the midst of earnings season, and it's been a fairly mixed set so far. We've seen high valuations continuing for those market leaders, and of course combined with the slowing economy and subdued consumption trends, where should you be placing your bets? Well, we're now joined by Vineeta Sharma, Head of Research at Narnolia Financial Advisors, to talk about a few of her top picks. But Vineeta, first let me just get your take on the kind of market action that we've seen. Been trending lower and lower. We've given up important supports as far as the technical levels go. In terms of the sentiment, it's very, very thin on the ground. What is your take on how things will pan out going forward from here? Because the last time we saw a fall like this, it was back in October, but that time, it was largely the broader end of the market that was losing out. This time it's frontline quality names. What do you anticipate will happen next?
So see, as far as market is concerned, we are already trading at 19 times 1 year forward PE. And the long-term range, if we see for the market, has been 17.5 to 21, 22 times. And the broad, the sense regarding the business or even the results is not favoring market. The liquidity issue is still pitching to most of the companies, and large capexes have been delayed, and so there is a sense of a little bit fear in the market participants. There is working capital issues going on with a lot of companies, dealer inventory getting higher, etc. But then this fall, I would say, shouldn't be that long lasting, and maybe it can be a short-lived and pain, I suppose. But then let's see how the revival comes. Surely we are trading at 19 times, which is not a very safe sense of a PE multiple. So maybe a little bit correction is there, still tuned for the market going forward.
All right, can't rule out further downside to the current market. We had, of course, run up significantly. Perhaps some of this correction was warranted, is the view coming in from Vineeta. But that said, Vineeta, even in the midst of a market like this, you have some top investment ideas for us. And the first one I want to discuss is DMart. Talk to us about what you are liking here, even at a time when we're seeing this kind of concern coming up from, the retail, the consumption side of the market. Why do you like DMart?
So see, DMart is, I think, one of the most efficiently managed retail company in India, and I would say the retail industry as such, it's still not that penetrated in India, and there is huge scope of it growing forward. The company is strategically working on the lower margins, and that has been a little bit of a concern for most of the analysts, but I think that's the strategy. The company wants to bring in the lowest cost products to the consumers, and since the supply side of DMart is very, very strong, they're not getting very aggressive into opening stores because they want to give the quality to the customers. So they first see, since they have own stores, so that project viability has to be seen. Plus, the supply side has to be very channelized before they just go on aggressive with the stores. So I think the management is very cautious and very smart in how to handle the current downturn. And overall, because of the price consolidation for a long period of time, I think the price to sales now is favoring DMart. And on a 2 year forward basis, I would say the price EV upon sales for DMart is around 3 times, which makes it attractive buy. So somebody who is betting on a retail story should go on for DMart.
All right, so DMart definitely a pick from the retail space. We're well off those 52-week highs. We were above 1698 levels, about nearly 1700 on DMart. Currently trading at a much, a more rationalized price of about 1436. That's an opportunity as far as Vineeta is concerned. Any worry about the kind of competitive environment in this space, Vineeta? Not just from other brick and mortar players, but e-commerce, of course. DMart has said that they will be coming out with some kind of offering on the e-commerce side themselves, but largely that isn't their business model, and those are not the customers they cater to. Would this be an area of concern, or do you think they still have the lead there?
So That's definitely one of the concerns going how the retail structure in India will pan out. But then DMart has they also have online retail sales. But I think the brick and mortar sales will continue to persist because the DMart has its own uniqueness in the product in the way they are managing. So everyday low cost is one of their not only the strategy but the principle for DMart, and I think that's really going to stay and take DMart further.
All right, so that's Avenue Supermarts for you. The stock has, of course, rebounded quite significantly. We're up about 15% in just the last couple of months as far as DMart goes. But let's also talk about a stock that has been in focus, Kec International. Vineeta, this is another one of your top picks, and if you look at just the last 5 months or so, 5 to 6 months, we've seen a recovery to the tune of about 30-31% coming in on KEC. What is driving, the action on this front, and what do you like about the business?
So KEC, there are two separate, one is the normal T&D business, and the domestic T&D business was going through a tough phase, but I think that is recovering. Lately we've seen some kind of a recovery on the order book side, but that is being offset by the international SAE performance, which is doing very good. Now, apart from the T&D segment, the company has various other like cables, and the most important or the growth what we are seeing is in the railway side, wherein it has started bagging a lot of orders. And if we look at it, Indian Railways, they have a plan to do some 10,000 railway kilometers electrification every year for the next 3 years. That gives a lot of opportunity for KEC, wherein it has some 40% market share in the electrification business. So that I think should drive the growth forward. Already the total order book for KEC is around 20,000 crore or so, and currently the ROE is around 20%. So once the return on equity is around 20%, it has a good order book, and it has corrected fair amount of price, currently trading at 12 times around FY21 EPS. I think the growth is here to stay. The margins have been maintained earlier also, and the company is also guiding for a stable kind of a margin. So 10 to 15% CAGR, the top line would grow. That gives you a safety margin of safety, I think. So that should be one stock one can go for.
All right, so KEC as well as DMart, a couple of topics coming in there from Vineeta. The third one and the final one that you have for us today, Vineeta, is SBI Life. And I have to say, these life insurance stocks, they've emerged as the star performers of earnings season so far. If you pull up a 1 year chart on SBI Life, it gives you a very clear idea of the kind of move that we've seen in just the last year alone. In fact, from that low that we made in October, we've seen a run up of about 55% coming in on SBI Life, and it's continuing to head higher. Talk to us about what the rationale is here, of course, for liking SBI Life, for liking the space as a whole, and where does SBI Life stand out versus its peers?
So life insurance industry, as everybody understands now, is a very under-penetrated industry, and there we are seeing good amount of value migration, especially from from large legacy players, or we can say LIC. There is a value migration towards the private players, and SBI Life, it is the product mix that they are offering is on the better side now. They have a huge distribution channel, and they're also ramping up this distribution channel even more, which is very important, because the correct placement of the distribution channel is important for higher penetration and higher market share. Now, if in the current results also we see the new business premium was growing at a healthy 39% year-on-year growth. If you look at the AUM is around 1,46,000 crore, which has grown around 20 to 21% year-on-year, and that's been the consistent growth. Especially if you track how the premium would be going forward. If we look at the 13-month or the 49-month persistency ratio, both of them have improved good. Say 61, 62 was the persistency in 49 months persistency. Now it is around 67%. So both of the persistency ratio is improving. And if you look at the EV, on which price to EV, embedded value on which we normally value a life insurance company, that is around 2.4 times FY21. So it is at a not very less. I would not say the valuation is less, but yeah, certainly it is in the midway from, if we compare to HDFC or ICICI or SBI Life. So I think given the story for insurance to continue for a longer period of time, given the under-penetration and the huge growth that is being witnessed by these companies, it is a company one can go for buying at this market also.
All right, so that's SBI Life for you. It's just off those life highs, and definitely we've seen very strong quarter coming in for most of these life insurance players. SBI Life is a preferred pick along with Kec International and DMart. A few topics coming in there from Vineeta. Vineeta, thanks so much for joining in and sharing those with us. But let's shift focus then to earnings season. A weak first quarter coming in for Escorts.